Good evening, everyone. Welcome to the market strategy session for Sunday, January 3rd, 2016, the first Sunday of 2016, the first session of 2016. Let's quickly go over the economic reports. ISM manufacturing at 10 o'clock on Monday. Tuesday, nothing. Wednesday, ADP non-farm employment, trade balance, ISM non-manufacturing PMI, and the FOMC minutes at 2 o'clock. Thursday, unemployment claims. Friday, average hourly earnings, non-farm employment change, the employment rate. Those are known as the job numbers. Now, as far as the market is concerned, we are coiled up. We are getting ready to move. Santa Claus barely breezed by in the sled. He didn't really come a call it. There's problems in the Middle East, and it doesn't have to do, well, it always has to do with Israel, but in this case, it's Saudi Arabia and Iran, and I meant that as a off-cuff remark, is that everybody likes to blame Israel, but I like to see him blame Israel now, since the Saudis and Iranians are now going at it, and that's getting nasty over there. Will that affect oil prices? As of right now, oil's up a little bit, but oil still looks like it's headed lower to me. Will it have any problems here for the U.S.? Well, probably not, unless oil gets out of control, starts to go berserk. Then maybe it can weigh in. People get nervous about the oil prices, but more than likely, it's not really going to have much of an effect. The real question is, and I really want to see what Paul has to say about this, is does the fact that Santa really didn't come to Broad and Wall and the small caps are woefully underperforming when they should be outperforming this time of year, is that going to have a big effect on us here? And does it change your mind, Paul, of the Dow going to 20,000? Do we have components in place to start a prolonged pullback here, even a new bear market, or is this just one more speed bump in the inevitable next push higher that we're looking for? So with that being said, here's Paul. Yeah, no caviar for me. You're right.
Yeah, hold on one sec. Yeah, keep talking for a second.
Yeah, no caviar for me. It sucks. I think he welches anyway, and now I can just keep saying that because we'll never know. But the IWM.
The next time I welch will be the first time I welch.
All right. Very good. Very good.
Everyone's got a big mouth. Hold on, I just sent you my piece.
I know, I got it.
Okay. So I'm just getting that up. Okay. Did you have a good New Year's? I almost called on the way home in the car yesterday.
Yeah, you should have. No, yeah, it was good. Just hung out at home. We actually watched the ball drop, which was amazing because we usually never do that. We're usually sleeping by then. But yeah, we watched the ball drop. How about you? You up in Vermont?
Yep, probably the worst vacation of my life.
Ugh. So the best meal, but the worst vacation.
Great meal. I was definitely jinxed. Not limited to beginning the vacation skiing in a t-shirt in the middle of December for 3 days, where you had to take off your skis and walk at least 25 feet on every run. The only 3 runs are open because of the mud. Then we had a 2-day ice storm, which really sucked. And then, let's see, an ice sheet released from the roof above me and crushed the hood of my car.
Wow. Are you going to claim insurance?
Well, the development where we are, it's called an act of God, and to go pound sand. Well, ice coming off a roof is a design flaw, not an act of God. God forbid it hits anybody walking underneath it. So now we'll have a pissing contest with who's paying for it. Then I threw my back out again.
Yeah, but but you always do that.
Well, this time I did it really badly. But instead of resting, I said, you know what? I'm going to take 4 Advil to get me through half a ski day. And I have not slept in 5 nights now. Let's see. The toilet broke. What else happened?
Wait a minute. I'm confused how you didn't sleep, though. This makes no sense.
Because my back is so bad that the slightest movement sends it's 3 inches to the left and right of my spine, right where my belt is. So when I breathe, when I take a deep breath, when I just slightly move, I get this incredible, intense pain.
Wow.
So all I wanted to do is just ski one more day and ski one more day. Well, I lasted until yesterday, then I couldn't take it anymore.
Wow.
So
Sounds great.
So I got meds, which I'm on, but not really helping. I can't go into the night without sleep. I'm gonna shoot somebody, then myself.
But what kind of meds did you get?
1 muscle relaxant, 1 painkiller, and I've never taken that stuff. I don't take that kind of stuff, but I can't deal with it anymore. It's brutal. I mean, I'd rather play golf with you.
Yeah.
So.
No, you wouldn't. But okay. Right. All right. You gotta just text me when you're done.
All right. Later on.
Bye.
I'm just gonna move this. All right. So. I'm going to pause a couple of times, a lot of times, to take a breath, because my back is just killing me. I am going for, so before you guys email me that I'm an idiot, I already have a note to go to start physical therapy tomorrow, because I got to ski next weekend. And I already I spoke to my orthopod, who's my ski buddy, on the phone, and his comment was, when I said I skied all this time, he said, it's all for the cause. So, in other words, I'm an idiot because I ski, but I love skiing. So into the market. Crummy end of the year for the bulls. So now we know, I think I mentioned this last week, the last day of the year has become a modestly weak day. So I thought Friday would be a little weak. I didn't think it would be down, 1%. That's number one. Thursday was a day that really disappointed the bulls because seasonally and the trends say that Thursday was actually Friday. So Thursday was supposed to be down, Wednesday was supposed to be up. They're both down pretty good. Crummy close to the year. The Santa Claus rally, the textbook one of the last 5 days, once again did not appear. So it's been a couple of years in a row now. As I'm looking at my own stats, and except for 2013, we've been down the last 5 years, I think the last 4 to 5 years. Bear market hasn't appeared yet. And I wonder out loud with a lot of these seasonal things that I look at whether the computers are arbing that edge away. So just kind of throwing it out there. We begin the new year obviously tomorrow. Markets, the futures are up 33 bips. Doesn't really matter coming off of down 200 bips to end the year. You got a lot of things going on right now. So we'll be analyzing them probably next week. I'm going to bomb through this pretty quickly because I really don't want to sit in this chair. It really bothers me. I just want to go back to lying on my side or standing up. Actually, I can try to stand up and do this, but the computer is way below, so I'll do my best. What concerns me now? The market internals have really stunk. The AD line is no bargain. The up-down volume line is really crummy. We know high yield stunk for a while. I do think a major low in high yield comes in 2016. Leadership ended the year kind of poorly. So a lot of things are lining up for the bears. But I think the opportunity for the bears to pounce is literally, it's right here. It's not in 2 or 3 weeks. So let's dive in. Here's a Dow. And let's expand this a little bit. Okay. Here's a Dow, and they all look kind of similar. Here's the question. This consolidation for the last 2 months, is it a consolidation of this significant rally where we're going to continue to blow off to the upside, which is what I've said it's going to be for months and months and months? Or is this a top in progress and we're coming back down towards the August lows? A week from now, I will have a much firmer opinion. If the bulls have to step up right here, they're not going to wait 2 or 3 weeks. The bulls don't step up here, we probably come down, we breach the December lows, and likely on the way to much lower prices in January. The bulls step up right here, and I'm not looking just at price. I want to see significant improvement in the breadth numbers, leadership, and the volume numbers. That's the Dow. S&P looks kind of similar, a little more of a downward consolidation range, but it's essentially the same thing. Mid caps, shorter term they've traded better, intermediate term they've traded worse. IWM is kind of the same as the mid caps, maybe a little weaker shorter term, but they don't look like the S&P and the Dow, where there was no huge rally that's consolidating sideways to blast off from. Huge question mark here. And the Qs look obviously the strongest with this consolidation right at the old highs, and we're only a 2-day rally from new highs in the Qs. So a lot of, I don't know the word dichotomization, but there's really more than just two things. So you get a lot of things going on. I'm going to look at another computer. Give me 1 second. So we have Santa Claus rally failing, and we have from the low of the end of the year to the end of the year, the S&P was the leader. That is very, very, very unusual. What typically leads from the December low to the end is the Russell. The last time the S&P led was all right. I can't find. Hold on. I'm still checking. So going back to 1990, the S&P has never led from the December low to the end of the year. So we just set a precedent. What does it mean? I have absolutely no idea right now. I'll say this. The Russell has to lead this week. And it's not just because I own it. If the Russell does not lead this week, that's going to give me a lot more concern than I've probably had since July of last year, which was back in here. So it's really important for the Russell to lead this week. And I think if the Russell does not lead this week, I'm not sure. I haven't I'll test it when we hang up. But I think that could have some really ominous precedents. All right. So let me just pull up Europe and emerging markets, and then we'll take some questions and bomb ahead. Europe, there's nothing going on here. I mean, it's hard to get excited either way. So I don't have an opinion on Europe. And emerging markets, kind of the same thing. Europe, emerging markets, and kind of the Russell look all alike. I still own, no I don't. I sold FXI last week, so I'm out of that, and I have a small position left in EWH Hong Kong. That's it for me in emerging markets. It's a pair of twos at best. You guys like Russia, so I'll pull it up before you ask. I mean, nothing to write home about here either. Give a little bit of a divergence in price versus the 14-day stochastic, but really nothing going on there. So let me look at your questions. Hold on a second. Let's see. Scott. Yeah, I know about his insurance, but the guy said I'm not going to put it through my insurance, and I'm not going to give you my insurance. So you got to call the state of Vermont to find out what the regs are. No Benji, no Viagra for me, but thanks for offering. So let's see. Does this look like 2011 to me? No, 11 was stronger. 11 was stronger. I'll just pull the SPY up. Let's see. So here was 11. I thought 11 was stronger into the close of the year. So the year closed like this for 11. And we were much stronger into the year, right near a breakout. Whereas now, we're kind of doing the other thing. We're tailing off. Let's see. Historically, the public comes in during the last phase of the bull market. The shares are distributed to them by the institutions. Will the public come back? Burwell, I do think the public will come back in the market before the next big bear market happens. So you get to separate it out. Could we get a 15 to 20% 3-month bear market? Sure. And the internals and the background information would support that. Do I think this is the end of the bull market for years? I don't. I'm not even sure we're going to get a decline at all. But I do think the public will come back before we go down again. I have not looked at all the year-end stats yet, and some stuff's going to be delayed. But I know that mutual fund cash levels are back to like zero. That always bothers me, but it's not a timely thing. It could go on for months and months and quarters and quarters. I will cover the VIX. Yes, I will, Benji. Cover the chair. Yeah, Benji, you're exactly right. So when I stand, I feel much better. If I lie on my back, I'm in pain. I lie on my belly, I'm in a lot of pain. I lie on my side, I'm okay. And I sitting in that higher chair, I feel much better. I agree. Let's see. Thank you. I feel like I'm 90 right now. No offense to anybody who's 90. My grandmother's 97 and a half. But Apple and the trannies look like they want to test their August low. Well, the trannies are kind of there, right? Which we'll cover. I mean, the trannies, I mentioned this 2 weeks ago. This was the closing low right here in December. So I don't think they're testing it. They're kind of breaching it. This is one concern if you want to be a real bear. And Apple too, which you guys know I don't like, and Scott doesn't like me because I don't like Apple. So And the Apple, is it going to test its August low? Yeah, I think eventually it's going to go much below. I think it head into the 70s in the next couple of years. Well, certainly, John, QE peaked when the stock market peaked, so it's certainly something to keep in the back of our mind. However, just because QE ended doesn't mean that we're never going to have a bull market again. The market is adapting and adjusting to QE, so just takes time. Markets are okay as long as they don't get shocks. Like if oil suddenly went to 90 tomorrow, that'd be a shock. Yes, Kevin. If the Russell does not do well this week, I will have much deeper concerns that we'll have more downside sooner than later. I know, Scott, you think I'm nuts about Apple. Yeah, I think it's going to go to the 70s the next couple of years. All right, I'm forging ahead. Boy, this hurts. Okay, we covered the trannies. We know they don't look good. Here's the banks. It's kind of the same thing. Don't look as weak as the trannies, but they're in a tight box here. The next move should take out this high or this low and probably get some follow-through buying or selling. This week's going to be key here as well. Stocks, guess what? Kind of the same as the Qs. Maybe the same as the Qs. I'll leave it at that. They're one of the lone bastions of strength. A bear is going to point out that perhaps this is a head and shoulders top forming. It could be. We shall see shortly. And XLY, the discretionary sector, is still hanging in. Still hanging in that nice consolidation. So you really see. So you still see, the stocks and the discretionary group, hanging in. But a lot of other groups probably have put in their bull market peaks. Other sectors, IGV, software, it's been the leader forever. It's still hanging in. Yes, you bears can say this could be a head and shoulders top as well. IYZ Telecom, gone nowhere. It's gone sideways for most of the year. Nothing. I have no comment here at all. XLF, diversified financials, a little stronger than the banks, but certainly nothing to write home about. Retailers stink. We know that from the past 6 months. They stink and still stink. Nothing there. A lot of no actions. Home builders, been digesting essentially this, the crash day, except for a couple days above it. But there's really nothing going on here. Another one that looks like it's on the weaker side, and I won't be surprised if this takes out the December lows before the rest. Industrials, nothing great there. Materials, same as industrials, nothing great there. Healthcare, however, healthcare looks not. I mentioned for the last couple of weeks. This is a beautiful coil. This certainly has bullish implications if we can get healthcare going to the upside. So put this as a long side trade on your list for a long, as is biotech. A little weaker than healthcare, but still looks okay. Energy has been frustrating, but energy is actually a drop stronger than the rest. Here you got a triple bottom, which normally does not hold. So tax loss selling is done. You expect energy to at least rally, 5 or 10% this month. So at some point during the month. And then you'd have to worry about another leg down in energy. Oil services, kind of the same thing. Nominal new low. Any divergences? Let's see. No divergences yet. Let's see. We got internet. I'm going to dial down a 65-minute chart. Internet, bad couple of days. Still not looking bad. Still a market leader. The defensive group, utilities, they're acting and looking better and better each week. What closed well off their lows on Friday. So it's not a bullish sign when utilities are leading at all, but it is a leadership group. So you got healthcare, biotech, utilities, internet, REITs. Don't look bad either up here. They're digesting nicely. Maybe a cup and handle. Not really. Scratch that. And staples, only one day off of new highs. So it's such a fragmented market with, it's the semis and discretionary looking okay, and then you get all the defensive sectors looking okay. So you can't glean a lot from this economically. Let me pause for questions. Actually, no, I'm not going to get questions yet. Here's the tan. Tiny would say probably this is a nice little pennant forming in tan. Looking nice here. The volume doesn't matter, but I'll look at it anyway. Yeah. So solar stocks look good. Any other sector that I normally cover? Oh, gold. I got to cover gold. That's what it is. GDX. Disastrous. Nothing going on in gold and the gold stocks at all. I don't have an opinion whatsoever on that. Let me pause and look at questions before I move on. I think the Saudi Arabia going toe to toe with Iran, Scott, is trying to take the Saudis' attention, the country's attention off of the fact that their reserves are dwindling at an alarming pace and they just raised, I don't know if you saw that, I think they raised the price of gas by 50%. Now I think it's now up to 50 cents a gallon or 60 cents a gallon, but they've got huge social problems in that country. I don't think it matters in the markets, frankly. The Saudis have never liked the Iranians. This is nothing new, but now the game is getting escalated. So let's say there is a war and oil goes from $34 a barrel to $50 a barrel. Does it really matter? Probably not. Let's see. Could we simply be in a market whereby the market maximum is don't short a dull market? Well, I always go by that adage. Never short a dull market. Sorry, my little son was running around with a Nerf gun the size of a bazooka. Let's see. Benji, I cannot launch that link you gave me, but I will try to copy and paste it afterwards, I promise. All right, so that's the sectors. Benji wanted to look at the VIX. So let's look at the VIX. Here it is. I don't have a strong opinion. Sorry, I wish I did. I just have no strong opinion. The only thing I'll say is on Friday's big down day, the VIX reversed. Here's a 5-minute chart. Bad tick. The bad tick. So I do not have an opinion on the VIX at all. Sorry. Could it go higher here? Yeah. Could it meander around? Yeah. I don't have an opinion. Although if we don't go down tomorrow, we should see some premium come out of the options market after the 3-day weekend. Let's see what else. Oh, AD line. Let's go to the advanced decline line. Here's the advanced decline line. Why does it not look? Hold on, I want to redraw it. This does not look fresh. There we go. AD line, anything going on here? Not really. Nothing to glean from the AD line. High yield, which you know I've been worried about. Let's refresh this. Here's high yield. Anything going on in high yield? Not really. Oh, here's a picture of, here's me on New Year's Eve. Here's my little guy who's 7, and my wife in the background. That's probably as non-old as I look, because I know I look terrible in pictures now. Yeah. Bad, thank you, Kate. Okay, so let's forge ahead. TLT, which I think I still own. Nothing going on there. It's almost in the same place it was last time we spoke. I don't have an opinion right now in TLT. I have a lot of no opinions. Here's the dollar. Although I am still a long-term bull in the dollar, I think it's going to go much higher. I told you when this day happened, the precedents historically say that price goes sideways, best case, or maybe a little bit lower. I would not be shocked if the dollar traded back down to the mid-90s. I don't think it's ready to blast off again. That's probably later this year or next year. Euro. I don't have a strong opinion in the euro either. So, nothing. Yen, I think you're right there. One more reversal, and I would sell the yen and short some more, like I said in here. I don't think the yen's going anywhere long term. So, except, I'm sorry, anywhere but lower long term. The loonie, as we know, it's the all-time record long for smart money, but they've been long for most of this move, and they've been long and wrong. The loonie can barely rally. That's not good. So if you're up for a trip to Lake Louise or Whistler or Revelstoke or Banff, somewhere in the Canadian Rockies to go skiing, you probably do really well because the Canadian dollar is so weak. Let's see what else. Gold. Nothing. There's just nothing going on in gold. What a shock to go to everything else. Copper. So last week we talked about maybe this is a little bit impulsive. Maybe this consolidation leads higher, but really nothing's happened yet. It was a really boring week. Natural gas, it's been all over the place. We know that smart money's been long this probably almost 50% higher. So you can't say they were finally right, because being early and wrong is not finally being right. This is a pretty strong move. We've seen this before in oil. That's a pretty strong move. Is it the launching of a new bull market? It's certainly possible. It is certainly possible that this launched a new bull market. So let's see how it consolidates over the coming week or so. Crude oil. Looks like natural gas on a much smaller scale. We got a couple of days up in crude. We're consolidating. If you're a crude bull, you have to explode higher in the next 1 to 3 days. If crude does not begin to move higher in the next 1 to 3 days, then it probably goes back to new lows again. Let's see. Let's see, we covered commodities. Let's go to the other ones. Wheat, guess what? Nothing going on. If I had to lean, I'd lean to the long side. Actually, here's the commodity index. Take a look at that. I don't like that either. Corn, same thing. Nothing going on. They're going sideways. If I had to lean, I lean long. But nothing with conviction here. Beans, same thing. Probably beans would be my third choice of the three. Nothing really exciting there. Sugar. I think sugar continues to put in a top. And we've seen multiple attempts by the bears. They haven't made meaningful progress yet. I do think it's coming. Cotton, absolutely no opinion whatsoever. Zero. Cocoa. I like this bullish engulfing here. I like that we pulled back and held. Another one where I definitely want to be long cocoa, but I want to see it start moving out this week. If we're talking next Sunday and cocoa hasn't moved out yet, then I think it probably breaks out to the bottom. But the odds favor, at least in the short term, cocoa breaking out to the upside. And finally, coffee did get a little bid this week. I don't really have an opinion here at all. And 3 strong days. It's right into resistance. Let's see what happens. So a lot of the same theme on the non-stock market stuff, and that is wait and see. A lot of stuff going sideways, not moving out. Let's see. What about the British pound? Well, I think longer term it's going a lot lower. So I'll pull up the FXB. So here's the British pound. I think kind of like the yen and the euro, you can short any rally into it for the foreseeable future. I do think we're going to go much below the 2015 lows. Look at the monthly chart. Where's it been? So here's the monthly chart of the pound, and I will say that we're going to go below the 2008 low in the pound. So it's another one where I think you can short every rally. Scott. All right, Scott. Scott, I'm not sure I could even sit on a bull, let alone ride a bull right now. Johanna, I gave you sugar. I think it's building a peak, rolling over top, and I think lower prices are coming. Why do I call it smart money, Scott? The Commitment of Traders report looks at people who are commercials, large speculators, or little mom and pops, non-reportable. So typically, you want to go with the commercials, with the people who are in the business, and go opposite the non-reportables or the small speculators. But it's not like everything else. Nothing's infallible. They can and are wrong at times, but they usually catch every big move coming. But they've been wrong in a bunch of key commodities for a while. So the smart money has been a bunch of dummies lately. Okay. And that was a really quick run through. Any other questions, comments, concerns as we head into the new day, week, month, quarter, and year? Let's see. Can I please recommend a website for the Commitment of Trader stats? So JN, I believe you can go to the CFTC, and it's all public information. It's how you massage it that matters. I've looked at Jason Gepford, sentimenttrader.com. I like the way he massages his data, and I always like Tom McClellan's stuff, the way he massages data. But you can download it onto a spreadsheet and tinker with it if you want to. TV, Scott. The only thing I booked so far was CNBC's rebranding their Worldwide Exchange show, and I know I'll be on, I think, January 13 or 15, but I haven't booked anything else yet. I'm supposed to go to the city on Tuesday, but besides my back being bad, I'm not going to sit in the train. A buddy of mine's Dad passed away, so I'm going to be with him Tuesday night. I can't. All right, Scott. I'll try not to bash Apple on TV for you. Let's see. What if we trade mostly sideways the whole week? That's a good question, Johanna. I guess I'd want to see what leads, because even if we go sideways in the S&P and the Dow, there'll be sectors that lead and sectors that trail, and I also want to see what the internals do. So that's what's going to matter a lot this week. I love this week. This is one of my favorite. This is my favorite week of the year because there's so many things going on. What does the Russell have to do this week to trigger a buy? So, John, the Russell is on a buy right now. The Russell's supposed to go higher. And just because it's supposed to go higher doesn't mean it will, but the Russell is in, even though it went down on Thursday and Friday, on Wednesday and Thursday, it's supposed to go higher. Let's see. Scott, I'm not sure what time that show. I think I'm on. I haven't heard yet. It's too early, but I'll be on somewhere around 5:45 in the morning, 6 in the morning. It's the show right before Squawk Box. If S&P rallies, do you think there will be further correction before May, Ronald? Depends on how far we rally, Ronald, and what the rally looks like. So let's take it, kind of 1 week at a time and see how we stand. What do you think about preferred closed-end funds right now? Some are trading at 90 cents in the dollar, yielding over 8%, safer than JNK. So Gunter, I have not looked at the closed-end preferred, so I'd be lying if I gave you an opinion. The only preferred, I own this preferred, PFF, which is this stupid bad tick from that crash. I own PFF as a long-term hold in a dividend portfolio, but I really I didn't do my homework on, are the closed-end funds trading at historic discounts or just normal ones? So I'm not sure, but I don't like JNK, that's for sure, yet. Aussie dollar, Johanna, let's see. Aussie dollar clearly looks stronger than the loonie. Nice bottoming. I don't have a strong opinion. Now I was looking at, is it EWA to short? EWA was one I was looking to get short because there was a lot of bullish sentiment on this one. I can't remember the other one that Tiny gave me. That I gave Tiny advice. I can't remember, but next week I'll have more information. Let's see. Burwell, yes, I have invested in closed-end funds. On the high yield side, when the spreads really widen and then you get the closed-end funds at 15 to 20% discounts to fair value, you're in the bottoming process, and that's what I'm looking for now. I mean, not right now, but this year you'll see some kind of, you're going to see I think you'll see a high yield crisis and some defaults and restructurings, and that's when I'm looking to buy high yield for a long-term trade. But we're not there yet. All right, anybody else? Questions, comments, concerns? So besides doing my my December month end and my quarterly numbers and my yearly stuff, I also have to finish my 2016 forecast. My notes are sitting next to me, and I shall continue to work on that and hopefully have it out this week. How about the closed gold? Are you talking about, Burwell, the Canadian fund, CEF, which is essentially a pure play on gold? Yep, here it is. I mean, for me, I don't know where it trades to fair value, but this does not look great or bad. It looks like nothing, a pair of twos. There will come a time sooner than later where a lot of these commodity stuff are going to be screaming buys. I just don't think we're there yet. Dimitri, 30-year bond, like a lot of other things, I do not have a strong opinion on. Sorry. I don't want to see. I was looking at this. I just want to see what Mint has been doing. This, nothing. Okay. All right. 10%. 10% discount Burwell and CEF. So I guess the question would be, what's the historical discount? And I'm sure it's got to be on their website. So if you want to do my homework for me, that'd be great. Just see if you can get a chart of what the historical discount has been in CEF, and see if we're at some kind of, Okay, thanks. Anybody else? Questions, comments, concerns? Okay. And with that, sorry I rushed through it, but I gotta grab some chow, take a pill, and I pray to God I get to sleep tonight, because I will be really more cranky and ornery than I normally am. So, and while I wanted to begin the year tomorrow with doing a lot of writing and research, instead I have to get an estimate on fixing the hood of my car, and then I have to figure out whose insurance is going to cover it, and go to physical therapy, and then I think I'm going to get rid of this car now. So much for having a productive day in the office. Yes, I know I'm whining. Well, my wife's heard it for 2 days now. But as long as I can ski next weekend, all will be well in the world. All right, I wish you all a good week. Bill, I cannot. Larry says gold cycles are aligning. Okay. Okay. I cannot, Jan, for some reason I can't copy your link. I don't know why. All right. Nope, doesn't let me do it. Okay. All right, guys. Everybody have a great night. Oh, there we go. Copy. Let's see what, oops, this was for JN. Oh, the commitment to traders reports. There you go. All right. Anybody else before I give Tiny the high sign to turn us off? Where is that? Benji's chart. All right, guys. Have a good week. This is what Benji sent. Oh, the VIX. Okay. All right. That is all. Adios.